Welcome to the Lone Star Capital Podcast. I'm Rob Beardsley, founder and principal.
And I'm Craig McGrouther, Director of Business Development.
On this show, we talk about real estate investing, business,
and so much more. Very excited today to have a podcast with two Beardsleys, but not just two Beardsleys, two authors. Because today we're talking about the newest, latest, and greatest book here, pardon my slapping, which is titled Maximizing Wealth Through Syndicated 1031 Exchange Strategies. Not by this man, but by this lovely person here, Dasha Beardsley. So we're super excited to talk about this book that just came out. So first off, congratulations on creating something that's so great. As many people know who interact with us and interface with what we do at Lone Star Capital, obviously we love our investors and we really love our 1031 exchange investors, but when they kind of inbound into our system, someone lets us know that we've got a deal going on, the first thing I do is defer to the expert, which is, of course, Dasha on this matter. So like Rob, this is a very niche down, specific, focused book topic, which is obviously talking about 1031 exchanges. And it's perfect to have you both here because you guys have worked in tandem to take down how much equity at this point? It's over $50 million, if I'm not mistaken. But how many 1031 exchanges have we done in the history of Lone Star Capital?
We've done over $60 million worth of 1031 exchanges.
That's awesome.
When you put that into perspective, we raised a little over $200 million. So it's a quarter of our business, which is 1031 exchanges, just to put it in perspective.
Yeah, and just for the record, you said $60 million. That's not in total deal volume or capitalization, where you've got, hey, you acquired $60 million worth of deals and there's, X amount of equity. That is $60 million of equity into deals. And oftentimes I think people don't realize actually how stressful these processes are. And also they don't realize the fact that you can actually 1031 exchange their deals from an active investment role potentially. Let's say if you own a home that's done quite well or some sort of like kind real estate property into passive investments. So I guess would love to hear from both of your sides just how you view the 1031 exchanges and kind of the benefits that you get through just investing holistically into our opportunities with that passive vehicle.
Yeah, so 1031 exchanges are a very powerful tool where you can defer your taxes indefinitely. And aside from the cash flow benefits that you can get from compounding your wealth at a higher rate due to reducing your tax drag or eliminating your tax drag with investing, 1031 exchanges, in my opinion, is one of the biggest estate planning tools that you can have. Because assuming you 1031 exchange up until you pass, your heirs inherit your stepped up basis, which means that all of the capital gains tax that you deferred throughout your lifetime basically gets wiped out. So that's a super powerful strategy. The problem is historically speaking, or just generally speaking, people view 1031 exchanges. People view 1031 exchanges as something that they have to be very heavily involved in, and that they would, potentially be exchanging from, like you said, a vacation home that they rent out into a duplex or a strip mall that they want to own. But what a lot of property owners and real estate investors don't know, that are familiar with 1031 exchanges, is that there is a more passive option aside from DSTs as well. So that's really the reason why I wanted to write this book, to really shed light on all the different ways that you can invest and complete 1031 exchange, because there's a lot that you can do in maximizing your wealth through syndicated 1031 exchanges.
Absolutely. And just for those, just to start, as you mentioned, there's often a lot of people do the DST, which is the Delaware Statutory Trust. Exactly, that setup. We do it in a tenants in common structure, the TIC structure, which is obviously a really powerful tool, as you mentioned. And I think one thing, just put in perspective, is just kind of the scary nature of 1031 exchanges. This process can get botched very often. Actually, you speak to people that come into our systems. A lot of the times they come in kind of late. They're saying, oh shoot, I had a 1031 exchange and I realized the deal that I had is not going to go through, or another group or sponsor said they could work with the 1031 exchange, but then it turned out that their lender did not allow that. So obviously these processes are really stressful, and they're particularly stressful when you factor and layer on the idea that if you don't successfully complete your exchange, you might have a really large tax burden that could come due. As you mentioned, if you eventually pass away, or when you eventually pass away, not if, your basis gets reset where you can just sell at that point, and you kind of really do actually eliminate the potential drag before, which is obviously very powerful. But when working with us, it's obviously a more streamlined process. But so what inspired you to write the book?
So truthfully, I have worked on a decent amount of 1031 exchanges within my role as the Director of Investor Relations at Lone Star Capital, but I knew that there was a lot more to the picture if I really researched, so I thought there was no better way to really learn the topic from top to bottom by writing a book, doing my own research, and I think this is a really good example of you learn by teaching. So this has worked really well for me, just really researching the topic at length and in depth. And it's been amazing, all the different strategies also that I've learned by writing this book.
Yeah, and I think I know the answer to this question, but who would you say the book is for?
Honestly, a wide range of individuals. This could be really great for someone who already owns property that's exploring more passive options. This is also a great book for individuals who only want to invest as a limited partner and see what type of options are available, from passive investments to passive investments within a sponsor's offerings, which is something that we offer. So it really, for anyone looking to invest in real estate, I think that this is a good book for.
Yeah, and I think the main point I wanted to harp home there more than anything else, because this is the answer that I kind of thought when I asked the question, was it's really for the everyday investor, the person who might own a couple of single family properties, someone who might have invested, the minimums in a syndication over the period of time that's going to naturally grow their way into owning, millions of dollars worth of equity in real estate. Not the big, large institutions, the big family offices, but just for the everyday common investor who's looking to maximize their returns. And that's the beautiful thing I would say about real estate, particularly with the 1031 exchange process is, let's say if you own S&P 500 stock, you can't sell that and then 1031 exchange that specifically into Tesla or to Apple or something of that nature, right? Mm-hmm. But with real estate opportunities, you in fact can do that, and that's kind of some of the alpha and the compounding benefit that the real estate investment opportunity allows you to do, which obviously you spearhead and facilitate. So this book is really fabulous for that.
I'm glad to hear that the everyday investor has gotten so rich recently, considering our minimum for 1031 exchanges is $1 million.
Yeah, exactly. Well, could we actually talk about that? Because that is really an often a frequently asked question we get. So what is the 1031 exchange minimum if someone is investing from their own property? Like let's say if someone owns a 10-unit property in Denver, Colorado. They own a 10-unit property. And let's say if someone invests, our minimum, which at the moment, as of April 30th, 2025, is $50,000, what that turns into. So we talk about the two-tiering of 1031 exchanges that we look to continue to do and will do as we move forward.
So our 1031 exchange minimum for TICs, that's tenants in common, that would be your first option that you provided, which is an investor that owns real property that is looking to invest in a deal with us as a tenant in common.
And so they're looking to sell the property that they own and then 1031 exchange it.
Yes, exactly. And that minimum is $1 million. For an investor that is looking to just invest in any of our syndicated offerings as a limited partner, that minimum as of today is $50,000. And so that's a great point, being that, as I mentioned a little earlier, we do offer, when we sell a property, we do offer the option for our limited partners to exchange into the next deal with us.
And that really requires no work on the investor's behalf. They're just basically opting into the 1031 exchange.
Or opting out.
Or opting out, and it doesn't matter what their original investment was. They could have even snuck in below our minimum with $25,000 because maybe they're a good friend or they gifted some cigars to Craig or something like that.
Listen, I love gifts. We just did our event in the Bay Area and people were showering me with them. So please continue the theme to do so.
Craig is in fact bribable.
Yes.
So,
I can be bought.
You can be bought. So yeah, even if someone snuck in below the minimum for $25,000, they'll still be eligible to do it in a syndication level exchange, which can be very confusing because when we talk, some people listening to this may have heard from, one of these, talking head attorneys that are out there on LinkedIn and so on, and they say, you can't 1031 exchange a syndication or into a syndication, or you can't 1031 exchange your share of a syndication, right? So there's these different permutations of 1031ing, and people can maybe have been fed not necessarily wrong information, but incomplete information.
Or different interpretations, potentially.
Sure, and there's also different risk tolerances as far as what people think is compliant with the SEC or with the IRS and so on. But yeah, so I think we just have to be really clear that limited partner investing $50K into a syndication can participate in a deal level 1031 exchange if the sponsor elects to do so. However, a limited partner cannot take their share of $50,000, right? Their interest in the property or in the venture, and when the property sells, they can't take that $50,000 interest and severally go and 1031 exchange it elsewhere. It has to stay within the entity because it's an entity level exchange. You go into all this in your book, which gets into the tons of details. I think as much as possible has been shared. Don't let this small form factor fool you. This is jam-packed just like the other two books that
Concise.
that have come from Lone Star Capital.
So that said, let's just actually talk about that. This is perfect, and this is very actionable for anyone who's going to work with us in the future. Your options when you invest with us. So let's just break through that. If you are a first-time investor with Lone Star Capital and you invest $50,000 with us, right, or whatever the figure may be as an investment, we close, so we invest that deal. It does how we were projecting to do, of course, and we are selling it at that point, the deal, and we lined up another deal. As a investor at that number, what is your option or options?
Mm-hmm. Your option, you can cash out, so you just get your money out and you're done with the deal. You can do whatever you want with it, buy a boat,
Pay the gain, whatever
right,
it may be.
exactly,
Pay the
and then
tax,
you can
buy
pay
the
the
boat.
taxes, exactly. Or you can participate in the syndication level exchange that we plan on doing, and defer your taxes. That being said, there is no minimum. Oh, this is a question that I get a lot. It's like, what if only 40% of the investors want to exchange? Can you still do the exchange? Absolutely. There is no minimum of the amount of equity that we maintain from the this deal that we're selling and transfer over into the new deal. So I think that's a really great way that we can also provide more certainty that we're going to be providing that option, is that there's no minimum requirement of how many people stay in or leave.
But our data does show that when we have provided this offer to our investors, the take-up rate or the opt-in rate to the 1031 exchange has been around 75% or more.
Amazing here. So those are your options as a retail investor. Basically, in short, move it with us or sell your interest, pay the taxes, and move on with your life. Buy the boat. We tried to burn the boats here and move on and go hard. So that's your option there. If you are the investor who is selling a property, maybe it's that guy who, as I mentioned that example, who sold a 10-unit property in Denver, Colorado. He's looking to exchange into one of our deals. They have $1 million or more in equity. And he exchanged indoor deals. We closed. The projections are great, the performance is great based upon our projections. But now he has the option. What are his options when you come into our deal through the TIC structure?
You mean when we sell the deal that he invested with?
Exactly. Excuse me. Yes. Yeah.
So, so to clarify, you're saying that an investor who has their own property invests with us. Now we sell the deal that they have invested with us. Now what do they do?
Yeah, or what are their options?
What are their options? So the TIC structure, which is what this investor would be in, that would be the structure that they're investing in, provides more flexibility. So this investor
Do you want to explain more about what a TIC is?
A TIC, a tenant in common.
Right.
So tenant in common allows investors to hold direct title of real estate in tandem, shoulder to shoulder with Lone Star Capital. So the way that we structure deals is there's the property, and we create a new entity that's an owner entity that directly owns the property and that is considered a borrower on the loan. For a 1031 exchange / tenant in common to work, the investor needs to hold direct title to the real estate. So they have to come in as a tenant in common, own the property directly with us as a tenant in common. So we're really more so partners in the deal structurally. And in that case, this investor or tenant in common investors are also considered borrowers on the loan. So the lender does have to do some additional due diligence on the investor. That being said, we've been able to structure it so that in most cases the investor does not have to sign on the loan, and the loans that we get are non-recourse. So while some investors do question the liability that they are open to or they're subject to, that's really reduced in the way that we structure it, and you're really only liable for the capital that you're investing, which is similar to a limited partner. That being said, we do try to make the process as smooth as possible, so it's not often that our investor would have to be speaking directly to the lender, right? So we're really facilitating. The investor just needs to provide some documentation for the lender's due diligence, which, for example, would be like a schedule of real estate owned, financial statements, and
credit
things like that.
Credit check authorization,
right? Driver's license. Nothing too complicated there, but really our role is to be the intermediary between the investor and the lender, get that process going. It's honestly not as complicated as some make it out to be, in my opinion, as long as everyone is communicative and responsive due to the timeliness of the exchange. But going back to your previous question, what is a tenant in common investor's options once we sell the property that they have invested in with us? They could exchange onto the next deal with us. They could go and buy their own property because they really have flexibility over their share of that property. So when they sell, they get their proportional equity and appreciation back, and the way that it's structured, they can really do whatever they want with it. They can not participate in exchange and then pay that deferred capital gains tax. So that is one of the benefits of the tenant in common structure, is the flexibility. So they have some additional flexibility that a limited partner wouldn't have. But of course that comes at the cost of additional entity filings and just a little bit more complicated. But it really just depends on what the investor's goals are and what they're looking to do.
Perfect. So are there any misconceptions people have about 1031 exchanges that the book addresses?
I think maybe not a misconception, but a common question that you do get is about depreciation recapture. So when we purchase a property, we do a cost segregation study in order to accelerate the amount of depreciation we're able to take within the hold period, the time that we hold the property. So that's really as an added benefit to our investors, so that they can really maximize the amount of depreciation that they get from investing in the deal with us. Depreciation is fantastic. It's almost too good to be true. The only downside is that there is some depreciation recapture when we sell the deal. So that's why, in a perfect world, you would buy a new property, do a cost segregation study, and then, kind of offset that.
Well, not just buy a new property, but 1031 exchange into a new property.
Right. Well, so you could use the depreciation from the next deal to kind of offset your tax burden, or even better, you could do a 1031 exchange, which completely defers your depreciation recapture.
Right. So you sell, defer the depreciation recapture, and then, of course, by necessity of a 1031 exchange, you have to also buy. Mm-hmm. And then when you buy, you create new depreciation, which just continues to snowball. Your equity grows over time, but also your depreciation grows over mm-hmm. time as well. And hopefully you never are forced to recapture it, because otherwise you'd be in a tricky situation with a lot of capital gain relative to perhaps the amount of cash that you would have at that sale.
Yeah, particularly when you do these, cost segregation studies or getting your accelerated depreciation. which could create a big liability, which is obviously something we want to mitigate with basically kicking the can down the road there, if you will, with 1031 exchanging from deal to deal to deal, particularly for those who've got that tenancy in common structure where this wealth has been compounding for a very long period of time. You don't want to end that cycle there, if you will.
That being said, though, I think a common misconception or a common mindset that investors get into is that it's like an end-all be-all to complete a 1031 exchange. And this is something that I say in my book, that no one's ever gone broke from paying taxes. So I think it's a much better route to go to potentially end that train and pay the deferred gains that you've had over the years than make a poor investment decision. And then the other side of that is that even if you do end up paying taxes and the depreciation or recapture, you're still in a better position having done those 1031 exchanges throughout the majority or part of your investment 1031 investing journey, due to, you were able to use that capital to its fullest potential.
It's the time value of money.
Exactly.
And also the fact that you're able to compound at a pre-tax basis, right? I mean, you made an amazing chart in the book somewhere, and
I can find it.
it's okay. I'm just flipping through, but it's an amazing chart. People need to get the book. They need to check out the chart. They need to download the guides and such. But anyway,
Show the chart and blur it so it creates a little more mystique.
Yeah. So basically, the idea is if you were to sell every 5 years, pay the tax, and then buy again, sell 5 years later, pay the tax, right? You're compounding your wealth on a post-tax basis. So basically, if you run a $100,000 initial investment and you assume a 15% annual return, and you assume a 35% tax rate, and you assume you're holding for 5 years every deal and then selling, right? Over 30 years, without 1031 exchanges, your 100K is going to go to 1.1 million. So it's going to over 10x, which is amazing, right? That's really great. That's the power of compounding your wealth.
In real estate, really.
In real estate,
Yeah.
right? However,
staying in the investing game.
Right, staying in the game, buying and selling every 5 years, just trading up, reinvesting. Now, if you 1031 exchange all those, rather than selling, pay the tax, buy again, right? And instead you're deferring, because when you defer the paying the capital gains tax, that money gets to then roll over into the new deal and then compound on a higher dollar amount, right? So over 30 years, the same 100K, 1031 exchanging all the while, ends up being nearly $3 million. So it's a 30x. And that's really the power of deferring your capital gains. Obviously, maybe at the end, like you're saying, maybe at the end you have to pay the tax, which would be a tragedy, but you'd still be in a lot better position than having just paying the tax all the while.
Right.
Can you both share some examples as to how some people have 1031 exchanged into our offerings and how they've massively benefited from doing so?
Yeah, there has been a decent amount of investors of ours that have sold their own property. I would say the majority of the time that we receive a 1031 exchange, it's from an investor who owns property directly, right? It's not someone that has invested as a tenant in common with another sponsor and is coming over to us. So there has been investors that it's getting closer to the last minute, but they had an ongoing relationship with us. And so while they were maybe originally going to purchase another property to own directly, there was nothing good that they could find, and so they chose to invest with us as a more passive investor, which has worked out really nicely. And I think that it's as far as your investing strategy, it doesn't have to be all or nothing. And having relationships with sponsors like Lone Star Capital, who do provide 1031 exchange opportunities, is a really important step. And creating those relationships is a really important step in kind of gearing up to sell your property and execute a 1031 exchange. Because while maybe it's your first choice to have a vacation home in Newport Beach that you'd like to rent out and use as your 1031, if there's nothing that really is penciling or making sense for you, it's great to have backup options and good backup options that you have fostered relationships with prior to the sale of your property and not making it last minute.
Right. So with that said, if you think you might have a 1031 exchange coming up within the next 5 years It's never too early to plan, and we'd love to have those conversations with you today. So obviously reach out to Dasha for that one. What are some of the key or logistical steps someone needs to have in place before they can 1031 exchange their funds into one of our deals?
The number one thing is selecting and starting the relationship with a qualified intermediary. So if that's not done prior to the sale of your property, your 1031 is dead. Essentially, you are not able to receive the funds from your sale, so you need to make sure that there's a qualified intermediary that actually receives the fund from your sale. And although, I would say it's not a super high risk endeavor to find a qualified intermediary, there is a lot of money here at stake, so you don't want to rush that decision. You want to find someone who's experienced and also learn about the types of fees that you can expect. There are some kind of, in some cases, some hidden fees. Some qualified intermediaries do interest skimming, so you really want to educate yourself and make an informed, good decision on who you're choosing, because they're also going to be kind of your advisor of sorts. Of course, it's good to read the book, have your attorneys, CPAs on your team, but a good qualified intermediary is really going to be there step by step throughout the entire process. So I think that's the number one most important first step to take.
And I know, you could be watching this in 2 years from now, 3 years from now, because there should be some very good evergreen content here. However, with that said, is there any group or company at this exact moment that you would recommend or that you've had good
They
experiences
should just
with?
email Dasha directly.
Okay, very good. I love it.
Dasha@lscre.com.
You can
love it.
contact Dasha in 3 easy steps.
Exactly, yeah. A quick email would be lovely. Awesome. So with that said, how does working with a sponsor like Lone Star differ from just the traditional route of going into another 1031 exchange process? Some of the services that we provide to an investor that make maybe their life easier than it would be doing it themselves, right?
So aside from the kind of managerial, aside from actually managing the property, we source the property, of course, structure the debt and equity, and manage the property. You have asset management, property management, construction management in-house, so it's really a hands-off type of investment opportunity. Aside from that, as far as the actual 1031 exchange process, I'm very involved here to make it a lot as easy as possible for our 1031 investors and any investors for that matter. But yeah, I would say I think it's a great option, especially for 1031 exchange investors for their first time, where you might be, a little nervous. Like, a good qualified intermediary is an advisor, but I also can be that person for our investors. So really, kind of a more handheld, white glove type of investing experience.
Very cool. What should investors watch out for when choosing a syndicated 1031 exchange sponsor?
So if you're looking to 1031 exchange continuously afterwards, one thing to really talk about is and think about is this an established sponsor that you think for sure is going to be in business in 5-10 years from now when they're looking to exit the property, assuming you want to continue exchanging in a passive manner. And then the other side is all of the other things that you'd be looking at just as an investor in general, right? Like, what type of fees is the sponsor taking? What's their track record? Do you find them trustworthy? Just overall, do you think that they're going to perform and do what they say? So I think that's very similar to just any sort of passive investor. It's the same things that you'd be looking for.
Yeah, I just can't harp on this enough. Make sure that the group that you potentially are going to 1031 exchange with has hopefully done this before in the past, and that you think they're competent enough to execute that, because the failure of execution, as we've gone over in this podcast, is just too great for something like this.
Yeah.
So make sure that you choose the certainty of closing, particularly when you look at that graph and you see the compounding benefit of these returns. That's something I just can't harp enough, is just certainty of execution, whether it be this syndication or any syndication, to be honest, is really, in business in general, right? Execution is everything. So just making sure that this is a perfectly done surgery is, treat this like an open heart surgery. No failure possible on something like this. So I can't harp on that enough. If someone wants to learn more about getting started with syndicated 1031s, what's the first step you'd recommend?
I would recommend reading this book, which you can find at maximizing1031.com. And then reaching out to us or myself at Dasha@lscre.com.
Cool. Awesome. Well, thank you so much for coming on. Looking forward to selling 40,000 more copies of these books like this, and this should be evergreen content here. So I think, as we move forward here, there should be more great content as well. I would imagine the third book of yours would be coming out in a couple of years, which will be likely something around property management and asset management. Is that a fair tip there to say, Rob?
I don't know where you're getting this information from, but maybe your sources are accurate. I don't know.
Right. So I look forward to selling the Lone Star Capital 4-pack bundle book coming out probably in 5 years or so from now. That'll be really great. All the information you're going to need with regard to real estate investing, syndications, and good stuff like that. Final note here, while we have a captive audience. So what about this event is making it a different and the best version yet?
Aside from the fun things that we have planned, every year we have better venues, better food, drink, cigars, everything always gets better every year, just naturally with each year that we do it. We are also having a very exciting keynote speaker, Paul Hutchinson, who is going to be talking about scaling his real estate investment fund to $20 billion, as well as his charity, the Child Liberation Foundation, and we're donating 100% of our profits to that charity. So we're super excited about that change this year.
Yeah, so that'll be super cool. I just want to mention, like last year, hand-selected, application only, invite only. So there's no riffraff here. I was having a very funny conversation with a sponsor yesterday just regarding the event. He had some questions. And I was like, I can assure you this is not going to be an event where you're going to get pestered by vendors or 1,000 debt brokers at this event. We've got maybe 3 people tops who do debt at our event. It's really going to be the proper ratio of the best vendors possible that are actually applicable, that can actually help your business, not just
that we stand behind, that we work with.
Only people that we stand behind, that we are actually working with. And then the best ratio of equity to sponsors in the industry for any event. I can't stress this enough, how obnoxious it can feel when it's just a bunch of sponsors, and if you're spending all this money and time, you're looking to obviously drive some value and pick up investors, family offices, institutional groups. Well, we are capping the number of sponsors this year, and it's all going to be directly tied to the number of equity groups that are going to be coming. So we've got a ton of equity people signed up. So if you are a sponsor looking to potentially come to this event, apply and pay and buy your ticket right now, because it is not guaranteed that we're going to have space for you as we get down to the wire here coming in August and September. A lot of tickets obviously sell closer to the end. Naturally, we know what our calendars look like, but don't be that person who waits. Buy your ticket today before there's not space for you, and we will cap this off. We're already halfway to goal with regard to attendees, which is great, but I can't stress this enough. This is going to be the best event of 2025 for real estate. I will stand behind that right now confidently. What would we pay to go to our event? I kind of throw this number around from time to time, but I think you've said, like, for you and me to go to this event, we would happily pay about $30,000 to go, roughly, just for the relationships that we would harvest. Is that correct, Rob?
Sure. Yeah. I mean, it's some relationships turn out to be invaluable, and this event definitely has that potential.
I would say more than the money is, we'll spend a whole year planning it, and that's more than the money that you guys are talking about.
I mean, we're spending more than $30,000, right? Because we're spending more of that in terms of real dollars and human capital. Our time.
We're not cheap here setting it up, are we?
No.
Yeah.
So, and we're not doing it for the money. So, if that answers your question.
Yeah, no, we're not. We're doing it for connecting, and it's actually really cool that we get texts from our friends, like JC obviously texted us saying, we did a deal with someone from your event. There's just a lot of that goes on. So if you really are in the business, if you really are looking to make new relationships, if you're a sponsor looking to figure out what equity groups are active, or if you're an equity shop listening to this, or equity provider and looking for the best sponsors that we are vetting and gatekeeping, you want to be at this event. So I can't harp on it enough. We're doubling down on the stuff that we found to be most valuable, which is obviously speed networking, small group breakouts, stuff like that. The cool thing about this event, as I always said, it's not the biggest event in the world, but you will have the chance to legitimately meet every single person that is there. Even Paul will be mixing it up, obviously. He's there, who's the producer, as you said, The Sound of Freedom, the #1 indie film of all time, amongst his incredible career in the private equity business there. But there's so much to be had here. So really, if you're looking to go to a conference, this is the one you want to go to. Awesome. Well, thank you so much for listening to the show. If you have any 1031 exchange inquiries whatsoever, reach out to Dasha here. Congratulations on publishing this incredible book. By the way, let's give a little due to the book cover here. This is incredible. Very, very, very professional. Very regal.
Thank you. Appreciate it.
Awesome. Well, thank you so much for listening to the show. If you think this will be helpful for someone that you know in your community who might have a 1031 exchange coming up, please let us know. We love to work with that person. It could be 5 years from now, but we want to work with them. So whenever they're ready, we're here for them. But thank you so much for listening to the show, and we will see you next week.